Ever feel like the market is just throwing curveballs? One signal says go, the next feels like hitting a brick wall. We're seeing that today with a clean energy stock. It's a real mix of conflicting signs.
Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're doing a deep dive into STEM, that's ticker STEM. And this is based on our research captured just today, October 2nd, 2025.
Yeah, and context is key here. There are some serious macro jitters going on. We're on day 2 of the U.S. government shutdown. That's casting a bit of a shadow, creating caution.
Yeah.
And look, this isn't just background noise for STEM. It can directly impact their business, right? Government contracts, tax credit approvals, even utility funding. That stuff can freeze up. So uncertainty.
Yeah.
Right at their doorstep.
Okay, right. So against that backdrop, let's talk STEM itself.
Yeah.
They manage smart energy driven by AI. And the big news is this major strategic pivot. They're going hard after a software and services model, chasing those high margin recurring revenues, the stuff investors love.
The holy grail, basically. Yeah. Exactly. But it feels a bit like a jam tomorrow kind of story, doesn't it? All the value seems projected out into the future.
Well, that's exactly the conflict, isn't it? Because Wall Street pros, they seem pretty skeptical right now. You look at the analysts covering STEM, all 7 of them, and it's a unanimous hold rating.
Wow, unanimous. So 0 buy ratings from the professionals.
0 professional buy conviction at this moment.
Yeah.
Yeah, they see that future promise, sure, but it's running headfirst into negative free cash flow right now, negative earnings. So the stock's flagged as overvalued based on current numbers. That price, around $20.21, it's running on pure optimism about that software future.
Okay, but hold on. If the fundamentals are negative, analysts are all hold. Why is this pivot such a big catalyst? Shouldn't they be shifting to buy if they believed it?
That's the million-dollar question, isn't it?
Yeah.
I think they're basically saying, show me. They're waiting for proof of execution before committing, hedging their bets.
Okay, this is where it gets really interesting then. Because the traders, they are not hedging. They seem to be taking a clear side. The options market is looking, well, incredibly bullish.
Yeah, it really is.
Put to call ratio is down at 0.61, which for you listening, that's very low. Extremely bullish, actually.
It means lots more bets on the price going up than down. Significantly more. Like for every 100 bearish bets, there are about 160 bullish ones.
And it's not just small bets, right? There's big money targeting that ambitious $30 strike price on calls.
Exactly. That's one side of the coin. The other side, well, there's a lot of people betting against it too. Short interest is really high, 13.81%.
Oof, 13.81% is significant. That's not just noise.
No, that's serious institutional money borrowing shares, betting pretty hard that this software pivot doesn't work out, or at least not soon enough. It's a classic battleground setup.
Okay, so analysts are on hold, traders are fighting it out, sentiment is all over the place. What about the chart? Does the price action give us any clearer signal? Who's actually winning?
It does, actually. The technical picture is pretty undeniably positive right now. The overall trend is strong. Short-term averages are consistently above the long-term ones. That's bullish.
And volume, does it back that up?
It does. That's crucial. You see money flowing in, and importantly, trading volume is much stronger on the days the stock price goes up. Yeah. That shows conviction from buyers. Momentum is also positive, and it looks like it's accelerating.
Okay, strong technicals. But heads up for you listening, volatility here is extremely high. Those price swings are getting wider. So any position really needs careful risk management. Don't get caught on the wrong side of a big swing.
Definitely. Tight stops are probably a good idea here.
So putting it all together, the macro worries, the company pivot, the analyst caution, the trader fight, the strong charts, what's the final take from our research?
Well, after weighing everything, we landed on a cautiously bullish outlook.
Cautiously bullish. Okay, why the caution?
3 main things. First, that big 13.81% short interest. That's a major risk. Second, the government shutdown is a real headwind, creates uncertainty. And third, you just can't ignore that unanimous hold from the analysts. Lack of professional conviction is definitely a yellow flag.
Got it. So where does the bullish part come from?
Purely from the technicals, really. The price action is strong, it's backed by volume, and it aligns with that positive catalyst story, the software pivot. The market seems to be buying into the story, even if analysts aren't yet. So for you watching this, the key levels form a battleground zone. Call it roughly $20.50 up to $20.80. If the price can break above that zone confidently and stay there, that's confirmation the bulls are winning this fight.
And the downside, what does the bullish idea break?
If the bears push it down and get a decisive break below the key support level around $17.40, if that happens, the bullish thesis is pretty much invalidated. Time to reassess.
Okay, so STEM feels like a real high-stakes poker game right now. You've got a promising hand with the new strategy and the strong charts, but there are some serious players at the table betting big money against you. Definitely one to watch closely. Trade smart. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in and catch you in the next episode.